Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, who likes to come to you at this time almost every day, at least when we're trading.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, if you just looked at the market, you probably wouldn't think much. We're up 25 points on the S&P cash. Dow's up 150. NASDAQ's up 111. But do you think the NASDAQ could be up 111 with Apple basically flat on the day or even lower, down 2? They're pushing everything at here. What I didn't like about Friday's close was that there was a massive amount of volume coming in at the close. We ended up doing over 9 billion shares on Friday. And that we, normally when you get a bad day, you can kind of like hang around there, bounce a little bit, come right back to it, lighter volume, and then that's it. So kind of at the minimum, we want to test Friday's low down around, 32.22 or something. But the high volume down there tells you that we don't have enough consolidation done to get the market rolling. We went right up to where options said that the market would expire a week from this next Friday on, which basically tells you there's not a lot of problems with being short the market. Maybe it goes lower. It's probably not going much higher. So we probably saw, at least for a handful of days, the possibility of it. We also have something else that I talked about a little bit the last couple of weeks. I just wasn't able to get an example. But I actually, where's it at here? Something's covering it. I actually got it, but where's it at? Where'd it go? Did it go away? Nope, I found it here. Oh, I know what I did with it. So there it is. I put it in my rotation because one of the things I noticed was something that I noticed in late 1999, and that is a absolute plethora, a horn of plenty, a cornucopia, as it were, of fly-by-night traders promising incredible riches. And these guys, if I had to say there was 20 times as many of them from the summer of 1999 to the 2000, January 2nd, I think I'd be low. But this is what I get, an endless parade for advertising on YouTube.
Eat, sleep, and trade. Eat, sleep, and trade. Eat, sleep, and trade, baby.
Yeah, there couldn't be anything wrong with that. The one thing that you know about with people that are like that is they probably haven't been around the market very long, as a lot of these folks did. Everybody's a genius on the way up. Nobody wants to be associated with the market on the way back down. But now that I'm getting, I'm going to say 20 of these different guys a day, and they all follow the same kind of thing. I don't know any of these guys individually. Maybe one of them actually has something. I would doubt it, though. Normally, if you've got money falling out of the disk drive, you don't need to
eat, sleep, and trade.
Eat, sleep, and trade, baby. Eat, sleep, and trade.
And trade.
Anyway,
Eat, sleep, and trade.
They're still eating and sleeping and trading. Okay, I got it now. That worries me. You pick up things as you go through cycles, but the hucksters and the people that promise untold riches, anybody that's been in the market for a while, they know that money just doesn't fall on them in bales. They have to work for it and sweat with it on pretty much every trade. If you're not worried, you're probably getting ready to get slapped. So keep an eye on that stuff. But to me, a good sign that we are probably in for trading markets where those folks basically said they made a lot of money. Who knows? People can phony documents. But it's generally the same thing. They're on some mega yacht they rented for the day. They're on some personal general aviation jet. They rented that one to go maybe an hour one way or the other, and they film all their commercials and they get off. No, they aren't flying around in jets paying $20,000 for a ticket to go across the country a day. They're not making that kind of money. It just doesn't happen that regularly. You got to fight for every dime, and you never know. Other things that do have me a little worried, though, like I said, was just the instant pop out there at the open. Again, showing very little bit of nervousness. What you generally get at significant lows that are going to stick is people that are very worried. And you know what they do? They wait the market to go up another 100 points. Then they start buying. They don't start buying at the lows. If everybody decides that that's what they're going to do, they're going to buy that low, probably doesn't work out the way that you think it would. But anyway, those are a few things to think about today. What else do we want to look at? Like I said, wanted to get into some other stuff. Probably going to avoid history today, and maybe we'll bring it up later in the show. But I did want to get to some of those things. Other things that are, of course, interesting is stocks acting like the dot-com bubble. And here's the one that you want to watch for the close. Doesn't really matter what happens here in the next hour or two. It's what happens at the close. If you want to live the dot-com bubble all over again, imagine Tesla closing unchanged, down. That would be another 106 points down. Do not doubt that it can do that. But it's kind of finding some equilibrium right here. But do not doubt that a company like this can actually give it all up in the last 30 minutes of the day. You've got a fairly decent setup with the three gaps higher. And, of course, huge volume today. And we'll talk in the next segment how you engineer one of these short squeezes like this. And, basically everybody's kind of given up on shorting the stock, and you do one thing. And we'll talk about how you organize what we saw earlier in the day on the other side of the break. Anyway, as we go, we're at 32.48 on the S&P cash, 28,390 on the Dow, and the S&P, and the NASDAQ is 92.57 up 107. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And a good question about electronic arts and what happens when you don't get the end of the double repo. Well, the problem is that the other 80% of the time, it goes back up and tests the previous high. So that is the rub: is that you want that close back above, and then the instant close back below as the rejection signal. The problem here is that why this one worked out, the other 4 out of 5 probably won't. You get a retest of the high. And that's generally why I like that double repo pattern, is it kind of tells you and gives you the kind of signal that you're looking for. As we said, Apple's down today. Again, this one's a little bit better, part of that double repo pattern. It didn't close back. I mean, you got the closes above, but on Friday, you actually got the close back below. And that's exactly what you're looking at in this one. Now, that's about where it should have gone, around 305 or so. You got some decent volume. But generally, this goes to where this all started. And that's why I'm kind of thinking that Apple may have bigger problems, because that actually means that you could go back to about 270 on this pattern, but a pretty good one. You got what you're looking for: 10, 20 days above it, couple days below it, couple days above it, close back below it is the signal. And then, of course, what we're doing today is just testing this gap up at 42 million shares, but you already got 33 million shares, so you're probably going to get the 42 million shares. And generally, this that wicked close and the big candle you had on Friday is a fairly good indication of that double repo pattern working. And again, you can use a 3x3 displaced moving average. It's not that different than the traditional 9-day moving average. You'll see that there's kind of the same thing. They're close, but that's the pattern you're looking for. Up, 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 up. Reaction. Everybody tries to buy it again, and then the next close below. So if you were thinking of shorting Apple, at the end of the day, when you see that it's going to close below that moving average, which is what? 316. on Friday, you could have pulled the trigger on it. I think there are better shorts out there, but we will keep an eye on all of that to let you know. Okay, what else do we have? Okay. Let's see. Oh, let's check the email because I think I saw some email questions. You can email me at path@tfnn.com. You can also call me at 877-927-6648 or put a message in the den. Okay, what else do we have happening out here? Questions about the market, and that is what concerns me right now is the breadth today. I would have liked to see it a lot better. We are up 26 points. We are in fund buying, but at the same time, I'm seeing a lot of these blow-off tops and a lot of stocks that had done nothing but go up. Apple is one of them. There are others in this, but just keep an eye on it. What else do we have out here that I wanted to look at? Boeing, which had been looking okay and been consolidating fairly well down here, is really needed to kind of hold this high, but you do have very light volume so far in this. Now, this one could be the kind of the opposite side of that double repo pattern, and it could go up in a down market. You are closing below that 9-day moving average. Let's go back to the displaced moving average. You're closing below it. If you got another close above it, could be that. And don't be surprised for highly shorted stocks to actually go up in a down market, because that's generally when the people that are involved with them love to cover, because that is a market where they can buy and it doesn't really put the price up a whole lot. In fact, there's lots of stories with Jesse Livermore talking exactly about how he had a market that he set up to do this, that, which is he made the market weak. I think it was he had like corn or wheat and had the market cornered. And somebody on the other side, a bigger fish than him, was driving it up, and it was hard for him to stay short. So he sold something else. I can't remember what it was. I think it was wheat or corn or something. He had wheat, and he sold a whole bunch of corn. Everybody saw it and started selling wheat too, that he was short of, and of course he was able to cover it. So that does happen to a great extent, that they'll shake something over here to make a market so they can get in or get out. But that's exactly what you want to be watching. And of course, for the most part, it's the close at the end of the day in these violently moving markets. Just like I said in Tesla, what happened today is kind of an interesting event. What happens at the close is going to be significant. So just keep an eye on that. Questions about Amazon, AMZN. Of course, we had that huge candle. We did close below the July 11th high of last summer. That high was 2,035.80. Got to 2,055 and reversed it out. What are we doing now here? To 2018. So you're still 18 below it. That's significant. That basically says that you could easily come back to about 1940. And, of course, there are a lot of these stocks that had kind of blow-off tops that are kind of coming back. That gets back into my theme about what I'm looking at in a lot of these stocks for breadth, and that is a lot of these things that had just pushed back up are not anywhere close to getting back to the highs in the market. So you have to look at that. Apple down $2. Who would believe that the S&Ps could be up 25 and Apple could still be down $2? Other stocks that kind of make me want to go home is Micron. These semi stocks kind of came off, and it came off in a big way. We had been long in the Tech Insider. And what do we sell at? 58? 55, 50. I can't even remember. Anyway, we sold this on the way back up after buying, what was that at? $44? back in here somewhere. Yeah, back in this little thing. When it popped back up above, what was it? Right in here. Anyway, we sold that, last week or whatever in the Tech Insider. But I like that pattern until really what you see is that close back below. And generally these things will ride a ribbon up in that, but then you get the real signal that these things have failed is the gap down, and that generally that breakaway doesn't give you an easy way out. Right now, $52 is where you'd like this to kind of come in and find some support. If it fails at 62, it can come back to 46, which is problematic. So you're going to have to watch that. Not a lot of volume so far today, but again, half the volume in the last 30 minutes on Friday. We'll be back.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I think we talked about it last segment. The question is there an inverse to the double repo pattern? Yes, 10 or 20 days straight below the 9-day moving average or a 3x3 displaced moving average, and then a couple of days above it, a couple of days below it, and then the next close above it. Generally, that's when you're going to have a big candle. You get that big candle, that is the confirmation. So a lot of times if you see it down there, lighter volume, you can pick it up and then if you've got, a test of a lighter volume, it kind of gets down there and just kind of gives up. That's kind of it. So a lot of times, though, those patterns are good. But a lot of times what will happen is the stock just goes sideways. And that is because that someone's down there accumulating it at that level. And every time it starts moving higher, they sell some and then spend the next hour accumulating it at the low price. So you kind of have to know that a lot of times at lows, there's a lot of accumulation. At highs, there's distribution, and it tends to be looking a lot more like Tesla, where you get this kind of massive shooting star in these markets. And then that's where the real problems exist. Anyway, no guarantee, but, this is the way that things moved on a daily basis in the last half of 1999 for that. And again, you could have $100 moves in the last 30 minutes in a stock like that, and it would not be surprising for a late 1999 kind of move. But that's it. Let's take a look at Beyond. They had a nice little bounce that came out of the Consumer Electronics Show as they were showing Beyond Pork stuff and everybody else. What's the other, Invincible Meat or whatever it is? The other companies making Soylent Green. And a good example here, same thing. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, closed below it. And you just kind of slide back down. Now, ideally, if you're looking for this thing to roll over, you get a couple of days of a bounce, and then the next close and that really what that little thing at the very end does, where you get the close below, you get the close above, and then you get the next close below, is showing you the not repulsion, but the I'll think about it in a minute. Not repulsion. What do you call it? Not resistance. Rejection. That's what I'm thinking of. Yeah, rejection there. Okay. What else do we looked at Amazon, NFLX, see if any of these others are starting to look this way. We shall see. Okay. Netflix. You got into this. Now, this is actually looking fairly good. I'm not I think there may be better shorts out here, but this is about as good as it gets. You've got about 4.5 million shares today. You spiked it with almost 18 million shares on the 24th. You're back into that. You're into the double gap. And a lot of people don't know it. And I didn't know it until I wrote the software myself. But this double gaps, confluence zones, these things are so much more powerful than individual gap itself. But you came down with 31 million shares, and you're back up today with Netflix with 4.6 million shares. Maybe you got a little bit more to this, but you know what? Right now, it's probably close to maximum resistance for prices going any higher. The incredibly light volume on a day where the S&P is up 24 and the Nasdaq's up 108 also tell you something. You don't know whether any trade's going to be a winner before you get in it, but guess what? You can always figure out when your back's to the wall and know that if it goes any higher, you're probably on the wrong side of a trade, and that is one there. But super light volume probably is significant in that you could easily come back to 325 on this trade, and it really wouldn't even bust the case that it could go back up and retest it at all. All you know is that you're at fairly significant resistance for that. Okay, question about the TLT. Man, this thing is at super hard resistance. Same kind of pattern. You go back to this gap down. That is from the, September 5th of last fall. It came down with 20 million shares. You were up into it with 14 million shares on Friday, 9 million so far today. Looks like it wants to get to 146. But again, a little lighter juice out here. But this is where the rubber meets the road, and you kind of have to pick a team because this is probably going to get fairly violent fairly quick. VeriSign. I was watching this one for some reason. I can't remember what it was. Oh, yeah, another double repo pattern. That suggests you could go back to 193 on this one. It didn't, it's about a 5% move, so I didn't jump on it. But if you're looking for these patterns out here, 10 to 20 days above 3x3 or 9-day moving average, a handful of days below it, a day or two above it, and then the next move below it. So you had the big move on Friday below it. As long as it stays below that, generally it's pretty good indication you're on the right side of the trade. I just don't see that much meat on the bone for that one. Okay, what else do we have? Yeah, those are just opposite versions of it. Okay. And what else do we have here? Okay. Let's go back to Friday. I want to see how some of these stocks are doing after they had their big moves on Friday. Amgen basically hanging out where it was on Friday. Amazon, we already talked about that. Aon, a little higher today. Booz Hamilton, the people that brought you Mr. Snowden, nothing after earnings. BERY, this one kind of blew up on it. It's back in. While you're just at the bottom of this gap up with 4.5 million shares. Not bad. You got 1.2 million shares on this one. Bees or Homes, of course, rolled over fairly hard. And I think this is what the market is really worried about. Huge volume on Friday of 2.6 million shares. And that was at least double the November 14th day higher. So, while you're down today on a lighter volume, I don't know if it's saying a whole lot because you gave that all up in one big bite. Caterpillar, a little bit more down, filling this gap that goes back to the 21st of October. So we've got that. But again, a lot of these are on the wrong side. Summation index is headed down. Surprises come in direction of the summation index. So we got problems that aren't going to get solved in the next 30 minutes. We'll be back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Just sent it to you twice. Okay, I'm on the air. Fine. And we're back. I had to get something. Sometimes you can only get done during the commercial breaks. So I had to get that out. So what else do we have going on out here? Got some more emails. Okay. That's interesting. A deal that's not a deal. Could be. Okay, let's go back to some of this other stuff. Okay, and what else? Okay. Oh, we were going to look at some of these other stocks. I was just trying to get to from Friday. Oh, there was another question that I forgot to answer, how they can run these Tesla stocks like they did. And the answer is that to short a stock, it has to be in a margin account. And, of course, if you're in a margin account, you decide to pull everything out of that margin account, those shares have to be covered right away. So they pushed the market up, and then apparently they got a lot of people to do the exact same thing, which is close their margin accounts and move all the shares over into non-borrowable conditions. And that was the run from about 725 up to, was it 785, something like that. So it's probably going to be a little bit tough to see the move back down, but eventually those shares will come back in. We were down to about 2 days to cover, so I took a shot at it. But at least there's nothing wrong with being wrong. The only thing wrong in the market is staying wrong. So you want to stop out soon and often, if that's how it can be. Okay, so we got that taken care of. Just know that they can play some games, and that's where you normally get these last moves when everybody pulls the rug. Okay, what else do we have? But when you see these, a good sign when they pull these, that a top in the market or some significant downside still may be in the market. They generally don't do this when the market's going up. They do this when there's big problems either with the stock or with the market itself, in which case, even if the market's going sideways, it may be a good time to fleece as many folks as possible in Tesla. Johnson Controls, wanted to look at that one. Okay. I mean, you just went down in heavy volume on Friday. I don't think there's anything else to say. No real follow through today. To Phillips. Yeah, we're up 26 points on the S&P cash. Okay. Well, it wasn't bad on Friday. Could have been worse. I don't see a whole lot else out on that one. Weyerhaeuser. Again, this is where the market really looks weak. The tech stocks, Microsoft, kind of holding everything up. Huge volume down on Friday. Not anything really telling you anything different today. What was the big one out there? I think it was KVH that gave it up. And that also tells you have to be a little worried. When KV, was it Lennar? LANR? No, but again, this is where you're really starting to see a lot of these stocks potentially line up for double repo patterns. No confirmation on it, but this one's been above since the 3rd of January. You closed down below it on Friday. You're down below it, and you get a little bit of a bounce out here, and then you get the next pull down. Just rip the ripcord on those because they're probably coming all the way back to where that pattern started, which is about 58. Beazer, BZH. Okay. Yeah. And of course, I think we talked about that earlier in the show, or maybe just so many of the charts look like this, but that huge down day. And of course, 2.6 million shares, same thing, $13.50. That just ripped the lips off of those folks. XOM. Tesla 108 is what I have. Okay. But generally, you have the stocks that actually have some kind of value, and those are the ones hardest hit in a down move, and the ones that are most highly shorted, at least for the first couple of weeks, kind of go counterintuitive to the market. And the easiest way to get rid of a lot of shares is just shove the market higher and fleece anybody that's short a stock like that. Okay, ExxonMobil. I noticed some people out there trying to buy the bottom in crude. It's hard for me to say that crude may be exactly the same as natural gas in that everybody's looking for a bottom, so you're not going to find one. I don't know how many people I've talked to that thought that they were going to find a bottom in crude in the last week, but it seems like everybody. And when everybody's talking about it, it seems to never happen. The proverbial pot that won't boil because everybody's watching it. So, just a thought out there that maybe you want to step back a little bit and take a deep breath. Other questions out here. Look at the XLE. Is it that different? Any different? I think we had somebody call in to me and tried to talk me. Maybe it was this one. Maybe it was something else. Tried to talk me into thinking that this thing had bottomed out. The volume, not as bad as it could be, but certainly significant as it broke through on Friday. You had 33 million shares to the downside to the 22 million shares back on October 3rd for the low. So you at least busted that low with significantly higher volume. Today, you're still already in it, 14 million shares. I don't see anything out here. And of course, what you would really need is the volume drop out and for this to close back above $52.93. That's an August 27, 2019 low in the market. Panic buying. Huh? That's interesting. Well, we talked about Tesla a few times already. But yeah, there's certainly a signal that Tesla is telling you today by the move in that. And the fact, like I said earlier in the last segment, when you start seeing the games are being played, like them moving shares in and out of margin accounts, and generally the way that that is done is that the folks at the CEO level kind of tell everybody to do it. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I listened to Larry Pesvento's show this morning. He said he's going to have a big Wyckoff trader on Thursday. So you may want to tune in for that if you don't normally catch a show. Of course, on mine on Thursday, I'll have Tim Ord on, and we'll talk about this. But we were talking about the possibility of maybe getting a little face slapped before the market started moving up higher. But we shall see. And, of course, who knows about the virus? Ooh, it's going to get you, folks. Be very careful. It's chasing you down the street right as we speak. Anything else that I want to bring up here at the end of the show? Let's take a look at the inbox. Question about, what is this one? Question about GLD. Take a quick look. Yeah, not a lot of juice. But, Monday's always one that kind of pulls back a little bit. But in the next couple of days, what you really want to see it move higher. If not, you can probably figure out that it's going to retest 145 again. You just really don't have a lot of juice higher here. The question is with not being able to short sell stocks or get in and out and go to lock limit in the China markets, whether or not the thing that they will go to sell next is gold. And I think that may be the path. But that's really what you've got to watch out for in these markets, and that is when someone's stuck in one thing, no matter how much they like it, they sell what they can, not what they can't, in markets that are locked. And look for the unintended consequences of that, because that's generally what starts all kinds of trouble to begin with. And that's fooling around with the markets. In the meantime, sell when you can, not when you have to. We'll be back tomorrow, same bat channel, same bat time.
Larry Pesavento has just started